These days we have all entered a shutdown period in the United States, and in this video I will explain what it is, why it happens, how we should approach it, what opportunities it opens for us, and I'll prove its full meaning with historical examples. So let's get started. The US government must approve its budget every year before the new fiscal year begins at the end of September. If Congress and the White House cannot reach an agreement on this budget, no law is passed to fund government spending. At that point, many federal agencies temporarily stop operating, and this is called a government shutdown. In simple terms, the government has money in its account, but there is no law allowing it to spend it. As a result, government employees face delayed paychecks, some services stop, and projects are postponed. In the past 40 years, more than 20 shutdowns have occurred in the US, with several of them standing out. For example, in 1995 to 1996 under President Bill Clinton, a 21-day shutdown happened. Interestingly, during this period markets did not collapse. In fact, the S&P 500 index went up. In 2013, during President Barack Obama's term, there was another shutdown that lasted 16 days. In the first days of that shutdown, indexes fell around 2%, but quickly recovered and went on to reach record highs by the end of the year. In 2018 to 2019, under President Donald Trump, the US faced the longest shutdown in its history, lasting 35 days. This time the market's reaction was more connected to Federal Reserve interest rate hikes and global economic slowdown, rather than the shutdown itself, and indexes later bounced back. These cases show that shutdowns in the US may cause short-term market fluctuations but have not led to long-term crashes. Indexes usually stabilize and continue upward trends after such events. Looking at historical examples, right after a shutdown is announced, markets often see 1 or 2 days of mild panic selling. Investors fear uncertainty, so prices pull back a little. But historically, this fear has not lasted long. Investors quickly realize that the government is not defaulting, meaning it is not refusing to pay its debts, it's simply that the budget has not yet been approved. That's why these small pullbacks often turn into buy-the-dip opportunities. For real investors, shutdowns are not threats but opportunities, because during such times, even high-quality companies can get unfairly undervalued. Short-term panic selling pushes prices down, and smart investors patiently start buying these assets. For example, if we look at investors like Warren Buffett, he always says, "Be fearful when others are greedy, and be greedy when others are fearful." In historical shutdowns we see that major investors were more often buyers, not sellers. And if you don't know which companies to invest in during such moments or how to identify quality companies, keep in mind that on this channel I have already analyzed dozens of early-stage companies like AMPX, Rigetti, and Wolf, many of which have risen hundreds of % after I covered them. That's why I recommend you check my channel and watch those videos carefully. Also, my goal is to reach 1,000 subscribers by the end of October, and if we can hit that target together, I will even share every single company I currently hold in my own portfolio, which has already brought me significant profits. So if you're curious about my portfolio and want to see it, make sure to subscribe to my channel right now. Now let's return to our main topic. The duration of a shutdown cannot be known in advance. If it is short, it may only create minor volatility in the markets. But long shutdowns change the picture. During a prolonged shutdown, federal employees remain unpaid, which reduces consumer spending. Government contracts, tenders, and projects stop, which negatively impacts company revenues. Unemployment begins to rise, and some investors are forced to exit the markets, pushing stock prices even lower. In the short term, this is a negative impact, but in the long run it opens doors to opportunities. Because as prices fall, true investors who keep cash reserves for moments like this gain the chance to buy quality assets at cheaper valuations. Real-life examples are the best. For instance, during the 2013 shutdown, stocks of companies like Apple and Amazon temporarily dropped in value, but once the shutdown ended their prices quickly surged. The same happened in 2018. That's why the best strategy during a shutdown is not to panic, but to think long-term and accumulate strong companies that are unfairly sold off. It's important to note that shutdowns cost the US economy billions of dollars every week. Experts estimate that a one-week shutdown causes losses of up to $15 billion. But the US economy is massive, and such losses do not bring it down in the long run. In reality, what investors truly focus on are factors like Federal Reserve interest rate decisions, global economic trends, and company company fundamentals. Shutdowns only create short-term noise, and that noise usually disappears in a few months, leaving behind inexperienced investors who panic and exit the market too early, missing big opportunities. The views of famous investors align perfectly during such situations. For example, Warren Buffett always says, if you're not willing to own it for 10 years, don't even think about owning it for 10 minutes. In other words, he ignores short-term panic and focuses on long-term value. Investors like Ray Dalio highlight diversification during crises, meaning spreading investments across different sectors to reduce risks. Peter Lynch's approach is also clear. The best opportunities come on the days with the scariest headlines. And shutdown periods are exactly the kind of days with those headlines. Today we are once again facing one of those opportunity periods, and I personally feel lucky because of it. Essentially, another shutdown has begun in the US due to the failure to pass a budget agreement for the new fiscal year. As a result, about 900,000 federal employees have been furloughed, and many services have been halted. Finally, let me also mention that if you want to get up to $30 worth of free stocks or crypto, you can register on the Quantfury platform with my invite code through the link I pinned in the comments. And if my videos are useful for you, you can also buy me a coffee through the other pinned link in the comments to support me and help me stay motivated to keep creating more content.